Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hi, listeners. Welcome back. Today's show is more about the cryptocurrency exchanges out there and what they mean to you. We are going to talk about a few more intricacies of cryptocurrency exchanges, and that's to get us all more educated about the platform for cryptocurrency. Now, my co-host today is Noah Leach, and he'll be helping me educate all of us about that. Noah, how are you doing?
I'm doing good.
Well, good. Here's a quick description of exchanges and how they function in the cryptocurrency network. So without turning it into a big story, let's get started. The show today is an addition to our last show, and it's more of an explanation of the current state of crypto exchanges and the crypto industry. Now, of course, we've augmented the content a little better. Because we've been asked for more exchange information, and basically, that's where it's at. Is you keep all your crypto in an exchange, so you need to know about what they're doing with it. Today, we'll have another look at how, as a user of crypto exchanges, cryptocurrency could be an economic path to freedom for you. But first, a quick review of what the exchanges are. I want to talk about Bitcoin a little just to give you an idea. Bitcoin actually delivered its eighth straight week of losses for investors for the first time in its history. Amid weak macroeconomic sentiment, inflation concerns, systemic risk from within the crypto industry, and the lack of immediate catalyst that could drive upside growth. Now, prices on Sunday were at 30,272 late Sunday, after falling as low as 28.7 earlier in the week. And Bitcoin last saw a positive week of gains in mid-March as prices jumped from 41,000 to 46,000, and it slid down every week since then, falling nearly 60% from November highs of just over 69,000. Now that's as Bitcoin goes, so does the cryptocurrency market. So you can tell that things are down right now. A lot of people are wondering where we're going, including me. And that's why we're here to talk about it. Now that we've got that information out there in the open, let's see what Noah has to say about that. Noah, do you have any reasons why the cryptocurrency exchanges are actually going through a hiring freeze right now?
Well, Coinbase, for example, they went through a hiring freeze due to Bitcoin and the market tanking hard. So they lost billions of dollars within just a few days, few weeks. And so their chief people officer, J.L. Brock, announced that Coinbase is putting a pause on hiring new employees as well as rescinding several job offers already accepted. And from what I've read about that is that some of these people that they've accepted and we're going to hire on, they just sent them an email saying, oh, by the way, we're going to be rescinding that offer due to the current economic crisis and the way the economy is going, et cetera, et cetera. And one of those people, I don't remember his name, but I read in an article he had left a $400,000 a year job in order to come sign on with Coinbase to obviously make more. But now he's already left that job and he can't get it back thanks to Coinbase. But you know what Coinbase said? They were like, in the email that he shared with, I think it was Business Insider, it said something to the effect of, we will help you get a new job. We will help you do this or do that, or give you some sort of like how did they word it? I think they worded it like it was seminars on finding a new job and getting a new job and stuff like that. And the guy was like, I don't need any of that. I had a $400,000 job before they hired me and then fired me before I could even start.
Yeah.
So that'd be one of the reasons why they're going through a hiring freeze. But it's just not them going through a hiring freeze. It's becoming pretty much everybody nowadays.
Yeah.
So.
Well, it is right now. I've got an article here that talks about the prolonged downturn in cryptocurrency prices, along with broader tech sector woes, has led to a growing number of layoffs at crypto firms as participants brace for a bumpier ride ahead. On Thursday, the Winklevoss-led crypto exchange and custodian Gemini was one of the latest to announce job cuts of about 10% of its workforce, with the firm citing turbulent market conditions that are likely to persist for some time. Soon after, Middle Eastern crypto exchange Rain Financial said it was cutting dozens of jobs due to the difficult market. On top of those pieces of news, the largest publicity-traded U.S. crypto exchange, Coinbase, reiterated on Thursday that it would be extending its previously announced hiring pause. And that's the one you just talked about.
Right.
So with the recent market volatility and subsequent layoffs, all will likely continue into the summer. However, it's important to recognize there's an opportunity to reflect on what is needed in the crypto space and reconsider where the industry is headed from here. And I think that's a big if. Where is the industry headed from here? You got an idea about that?
Well, I mean, it's probably going to end up going back up eventually, but I'm not sure when that's going to be. I'm sure nobody is, but now's a great time if you have extra money to either A, hold on to that money, or B, put it into like a fund, like if you have like a Webull account or some stock trading account, you can keep that money in there like it were a bank. Of course, you want to be able to withdraw it immediately, but when the market starts to take a turn for the better, then your money's already there waiting for you. You're not going to lose that money by just having it sit in an account, as long as it's not tied to anything. If it's just sitting there as depositable funds, or just sitting there and it's settled and it's ready to go and you can use it, then you should be able to just sit there and wait the economy out as long as you have that financial ability to do so. But if you don't, I just hold the money in your bank account because that's where it's going to be the safest.
Mm-hmm. Yeah, that's a good idea. How long do you think that this long-term? Well, let's see. What am I trying to say here? How long do you think this will affect the cryptocurrency market?
Cryptocurrency market,
with this long-term sentiment type thing?
If they continue doing what they're doing now, with the government, that is, with upping the interest rates and inflation continues, I see maybe another couple years, maybe even 3 to 5 years before things start to calm down a little bit. But with the way that economists are predicting inflation to increase, it could even be longer. Inflation's really pounding us right now. So
yeah, that's true. The inflation's really I think it's out of control myself, but I'm just a little guy here, so I don't know if they'll be listening to me. So, audience, just a quick reminder here. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM / your city, Monday to Friday at in your city at 11 a.m. and 4 p.m. Now, if you need more information or a printed email about this, just give us a call. We're at 314-781-7612. That's my office number. And if I'm not there, just leave a message on the machine. Or you can call the 800 number, which is 877-212-1400 for more info about that. Now, let's get back to the show here. You had mentioned that some people were unhappy with the fact that Coinbase didn't hire them after saying that, and the one guy who left his job and everything, which I think that's kind of unprofessional the way they did that. But will that give a black eye to the industry, so to speak?
It'll
for
to Coinbase.
future
It definitely will. You know,
for
I mean,
future
Coinbase is
employees.
probably going to have a hard time finding anybody good if they survive this volatility. You know, if they don't go bankrupt and they come back stronger than ever, people are probably going to be looking at Coinbase like, am I going to have a job or am I not going to have
Yeah.
a job? It depends. You know,
Don't quit
you,
your
you
job
can't
before you're
you
there.
can't give somebody an offer, have them accept, and then turn around and be like, oh, sorry, we made a mistake, because, you know, and they did it through an email, which I think irked people more than anything. You know, you couldn't come in and give them a severance package or something, which I don't know if they did or not, but nobody said that they haven't or have, so I assume they didn't. You know, if you got hired on and you've done any sort of paperwork, you know, they should at least give you a little something. But, you know, since the company can't really pay their bills right now, I don't know if that's going to happen. But that's the first thing that you got to look out for when, you know, all the bankruptcy rumors are swirling around, is that they freeze hiring, and especially after the rumors came out, then they freeze hiring. There's a good chance that, you know, Coinbase is probably not going to exist in the next year or two.
Okay. Now, it would seem to me that if someone had gotten a job like that, you know, he left a $400,000 a year job, that he could probably sue for that money that he lost. And again, if they're going to go banco, I guess it's not going to make any
it's not
difference.
going to make much of a difference,
Yeah,
but I guess he could, because, you know, he was offered a job, you know, he accepted it, he left his other job, and then right before it's supposed to start, you know, I think he might have a case there for at least some damages.
Yeah. And I wonder how many other people also.
Yeah,
got
well,
that.
you could probably do a class action, but, you know, I mean, Coinbase ain't looking too good, so, you know, if you get anything, that's the question.
Yeah. They.
But you could probably sue the people that run the company individually or as a group themselves, instead of suing the company, because, you know, they knew what was going on. I mean, they've sold stocks worth hundreds of millions of dollars now before all this started happening. They saw it coming. They know what's going on, but yet they did something like that. You could they could probably hold some sort of culpability in there as well.
Yeah, I believe that that's probably true. Now, one other thing that I was looking at here, they were this morning actually. I uncovered this article about. They're calling it the Wild West of crypto finance, and probably a lot of this is involved with. You know, I mean, it is involved with the crypto industry, but it's like the Wild West. About 170 years ago, Americans pushed westward across the frontier to seek their fortune in the gold rush. And that's what crypto is. It's a gold rush, you know. Greed and lawlessness turned this promised land into the Wild West, where the few exploited the dream of the many. So fast forward a century and a half, amid the global financial chaos and growing distrust of banks, coupled with technological innovation, gave rise to a new dream, a digital gold rush beyond state control. Satoshi Nakamoto, or rather the software developers using that pseudonym, created the source code of what they thought could be decentralized digital cash. Their 2008 white paper shows a great fascination with technology, notably cryptography, but not necessarily an in-depth understanding of payment and money issues. They aspired to realize an anarchistic utopia of a stable currency free from public scrutiny, And now there's going to be public scrutiny. But almost 15 years on, crypto assets are what everyone's talking about. Crypto enthusiasts marvel at the rise of the crypto market, with many feeling they should take their chances on the crypto gamble. An ecosystem has emerged from miners to intermediaries, all seeking to expand into digital finance. Crypto evangelists promise heaven on earth using an illusory narrative of ever-rising crypto asset prices to maintain inflows and thus the momentum fueling the crypto bubble. So they're calling this a crypto bubble. Is it a bit crypto bubble? Did it burst? Is that why we're here?
I mean, I guess you could use the term bubble for anything, really. The housing bubble, the Wall Street bubble, whatever you want to call it. I don't think that it's more of a bubble. A lot of people like to say that it's a fad, but I don't think that that's it either. I think that it's here to stay, and I think that it's going to get bigger and better. And of course, when you have cryptocurrency like stable coins linked to actual money, physical money, that they're backed by, so to speak, of course you're going to have volatility when that money, that physical money, starts having volatility, like inflation and interest rates going up and economic woes. Of course it's going to have the same issues. So I don't think it's more of a bubble than anything, but I would like to point out that a gold rush is a good way to put it, because a lot of people that are now billionaires would have otherwise probably not been billionaires, at least not as quickly, without investing their money into the cryptocurrency market. Now, that's not to say that everybody that invests is going to become millionaires or billionaires. Somebody out there is going to lose, but the majority of people are winning either big or small, and eventually, that's going to even out. But I still think it's more like a casino.
More like a casino?
Yeah.
Where you pay your money and you take your chances?
You're just taking your chances right now, especially with as young as it is. I mean, the American financial system didn't come to be without some woes itself, over the course of centuries. So...
Yeah, I was kind of thinking that the other day, is that, we have all these laws now for banking. You've got, all your bank account is now insured, and that obviously was to get people to put money into the banks because they were afraid the bank would go banko and they'd lose everything. Yeah. So I wonder if that's going to be the answer for crypto, is to get the government to insure deposits on something like that. Do you think they could do that? I mean, is that possible?
I don't see why they wouldn't or couldn't, but it's just a willingness to do it. I mean, it's just like anything. It's a willingness to do it over anything else. But, there was a famous guy, I forget who he was, but I remember the quote. He said, humans will always do the right thing last. So, as long as the government can still make money other ways, they aren't going to allow the smaller people like you and me to pull ourselves out. And, they'll wait till, they have no choice but to do the right thing last. And I think that's how, the economy's going to go. They're going to do the right thing last, as well as doing the right thing for cryptocurrency last,
And in other words, they're going to do do it when they have to do it.
Exactly. Yeah. They won't do it before to better anything. They'll do it when they don't have a choice.
Yeah, when they've gone through all other options.
And if you look back at history, I think that's exactly what happens, is that we always do the right thing last instead of doing it first. Be retroactive instead of proactive.
Yeah, that's an interesting concept there. So I was reading about the European Central Bank's interest rate decision. They're going to raise the interest rate, obviously, and so the U.S. has been raising the interest rate. So I'm wondering, with Europe raising the interest rate and the U.S. raising the interest rate, Is that going to affect the way the cryptocurrency markets function, or is it not going to
I think
affect
it
them at
will.
all?
I mean, let me read this little snippet here. The ECB will announce its interest rate decision on Thursday at 11:45 GMT, followed by President Christine Lagarde's news conference at 12:30 GMT. Throughout the remainder of 2021, the disparity between the ECB and other major financial institutions' rate rise probabilities continue to narrow. After the ECB ends its asset protection program at its June meeting this week, when fresh scrolled too fast, when fresh staff economic projections or the SEP are issued, rates markets will continue to price in a 10 BPS rate increase in July. According to Christine Lagarde, the ECB's president, the deposit facility rate will be lifted out of the negative zone by the end of September 2022. To begin with, the bank took this to suggest 2/4 point increases in July, and September will give and September, given the current deposit rate of negative 50%, or sorry, negative 0.50%, so it's half of a percentage point negative. Other ECB officials concurred with this viewpoint, meaning I believe that means that they're gonna the interest rates are gonna go up, so things are gonna cost more. Obviously. What that's going to mean for the European market is probably going to mean more volatility, as well as for the American market too. So, depending on how America responds, this could be very bad, which is probably going to cause more volatility. And I believe that a lot of economists, are expecting us to fall into a recession after this.
Okay, well, that's kind of interesting too. There's an article here with all these raises of interest rates and everything, but I picked up this article here. It talks about 9 out of 10 central banks around the world are exploring central bank digital currencies, according to the results of a survey conducted by the Bank for International Settlements, or BIS. The survey also found that more central banks are developing or testing a retail CBDC, which is a digital currency designed to be used by consumers, versus a wholesale CBDC, which is meant to be used by banks. The report published on Friday, an umbrella group for central banks, BIS is the group, presented the results of a survey of 81 central banks conducted in autumn 2021. The survey explored the level of engagement by banks in CBDC work, along with their motivations and intentions concerning CBDC issuances. So, BIS is owned by 63 central banks that represent about 95% of the world's total GDP. So they're actually looking into developing, I guess, their own cryptocurrency for banks, which is a long step from where they used to be. Okay, where they were trying to stop cryptocurrency from coming into the market. And now they're looking for ways that they can jump into it. But right now we're in the middle of a big downturn, and I don't know where it's leading. Where do you think that's going to be a positive thing, or?
I don't know, because it sounds to me like the death of physical money. Like all those futuristic TV shows from the 70s, 80s, 90s, 2000s. That's where they either didn't use currency, or they used currency on the form what they called credits,
Mm-hmm.
and you didn't have any way of using it except for like a debit card or an ATM card,
Right.
or something like that. There was no physical actual money, which could be a good thing, but could also be a bad thing, because it means that with actual cash, you can't be tracked as easily versus a debit card where they can see where you're at all the time, based off of your purchases. You know what I'm saying?
Right. Right.
So it could be a good thing. It could be a bad thing, but it sounds like the death of physical money. And then what that means for the cryptocurrency is, eventually once that becomes the standard, stable coins probably won't exist anymore. To be honest, I don't know how they could if physical money like U.S. dollars doesn't exist anymore, and it's just all based off of the cryptocurrency or the credits or whatever you want to call it through these banks. I didn't think that when banks started adopting that they would do something like that. I figured each bank would eventually develop their own currency or their own cryptocurrency, and then, they'd all be interchangeable. But I guess that does make the most sense. If they all got together and created one currency that they all used, then nobody could say no to it, right? You'd kind of be forced to be using it, especially when it's 95% of the world's GDP that's going to be more than likely using it. Yeah, okay. And then, maybe instead of a world economy, it's just or instead of just a global economy based off of all these different currency types, there'll be one economy for the entire world. Who knows?
So these guys have seen the writing on the wall, and they think that fiat currency is going to go away, so they're trying to corner the market.
Well, just not that, but then, think about all the data mining they could do on you based off of your purchases like Amazon does, targeted advertising, et cetera, everything that the Twilight Zone or
the Twilight Zone,
Black Mirror or anything like that ever showed you,
Yeah.
What was the other one? The Outer Limits was another popular one, where they did stuff like that, yeah.
So what... how long do you think it would take them? I mean, like, I'm sitting here wondering about that, but how long would it take them to corner the market on that? And if they think that fiat currency is going to go away, do they think it's going to go away soon, or do they think it's going to take a while?
I mean, if they do 95% of the world's GDP, then they could do it as soon as tomorrow. But they still have to develop it, But so I think in a couple of years, maybe 5 years, maybe it'll be a slow, gradual thing that takes decades or centuries. I don't know.
So it's going to be like, oh, by the way, we're not taking dollars or francs today.
Yeah, only credits from your little credit card or debit card or whatever the heck they're going to call it.
Yeah, that's real interesting.
Your money card.
So. Yeah, it makes me think that they really are thinking that fiat currency is going to go away. Now, El Salvador has done away with their currency, but they're on Bitcoin now. So I'm supposing that a lot of different countries are going to go that way, especially if they see this report. I mean, would it be beneficial to go ahead and beat them to the punch?
The conspiracy theories people could come up with just off of that article alone is just insane.
We're back to conspiracy theories? Oh, good. So what is the latest conspiracy theory?
I don't know. Nothing that I know of for cryptocurrency, but just off of that article, I could come up with 5.
There's a bunch of them. Yeah. Jurisdictions represented in the BIS survey make up close to 76% of the world's population. How about that? So 76% of the world's population have not said anything yet about it, I guess. So we're coming up on our advertising blitz. We'd like you to take a minute and listen to what we got on the list. And if you see anything there you can use, go ahead and buy it. And we'll be back in about 5 minutes to talk more about cryptocurrency. See you then.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit PublishingConceptsLLC.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Listeners, welcome back. Our advertising blitz is over now, and we're back to Cryptocurrency Odyssey. Like to continue on. When we left off, we were talking about the cryptocurrency companies that are being checked out by the banks. So we had decided that those banks may be taking over a new financial system or planning on it. So anyway, I was looking at another article during the break, and we've got the crypto crash news on the 7th of June. Now, the prices of many of the cryptos once again decreased in the last 24 hours, while the global crypto market cap shrunk to 1.22 trillion, down 4.52% over the last day, according to coin market cap data at the time of writing. Bitcoin price is once again in the red and below the 30% level. $30,000 level, down 5% in the last 24 hours. At the time of writing, Bitcoin on global exchanges was 29,603, and the total cryptocurrency market volume over the last 24 hours increased by 54% to 81.64 billion. The total volume in DeFi was 6.48 billion, which is 8% of the total crypto market 24-hour volume. So that's kind of what's happening right now. My next question here is one that I was wondering about. What do the big banks and mainstream institutions really think of cryptocurrency?
As you just talked about, I think the big banks are really looking forward to it with the revelation that you just had with that one article about them trying to create their own cryptocurrency. So, I mean, we already knew that JP Morgan had their own crypto coin called the JP coin. So that wasn't a big surprise, but the fact that 63 banks are trying to go in on one cryptocurrency, now that's news.
Yeah, so you think that I guess that's a yes.
Yeah, I mean, I guess now would be the best time to buy in when Bitcoin's down 50% or more from its previous all-time high. You know, I guess now would be the better time to get in the game. You know,
right? Well, all the cryptos are down, so this would be the time to get into the game. I think what people are afraid of is that will the game survive? You know, and what could bring the game to a screeching halt? I mean, have you got an idea about that? What could bring the game to a screeching halt?
Just more economic turmoil, probably. You know, I mean, what could or couldn't, I have absolutely no idea. But, you know, I would assume that if things get any worse, you know, we'll probably see a whole lot of changes worldwide. And not in a good way.
Definitely. Well, the U.S. debt is 33 trillion as of a month or two ago. So I don't know where it is today. Actually, I haven't thought about that or even looked at it. And
it doesn't do nothing but go up. So.
It never goes down, does it? And but you know, going up to 34, 35, it may already be there. It's not going to help things. So if we do have a big market crash, you know, a depression type situation, I wonder what that would do to the crypto market.
Just think about this. In China, they can't get anybody to borrow money from the banks. Nobody's borrowing money in China. That's not a good sign.
Yeah,
you know, you'd think that they need it, but I guess they can't even afford it to borrow money from China, and that's the Chinese citizens and everybody that lives there, you know, and they're blaming it on COVID and, you know, lockdowns and nobody's going to work and all this other jazz. And I'm like, yeah, it could also be that they don't have any money to borrow, so you know.
Right. Well, I think also the Chinese are pretty much farmers. You know, and they may not have the money, and they're not used to borrowing money. They're kind of a do-it-yourself type of people, and you know they would prefer to get out there and just fix the tractor themselves instead of going out and having somebody fix it for them. And so they may not be all that interested in cryptocurrency yet. You know. and with everything that's happening, it might sour a lot of people anyway. But if you're interested in cryptocurrency, and right now the laws, as far as I know, as long as you hold the crypto and you don't spend it, you don't pay any taxes on it. Well, here in the United States, now I know the laws are different in other places, but the cryptocurrency is taxable, and it's only, it's not taxable till you actually spend it on something. And is that liable to change, do you think?
Well, I mean, Biden was talking about making unrealized gains taxable, but that's crazy because they're unrealized for a reason. You haven't actually gotten the gains yet. You know, like if they would have done that when I made a bunch of money, or at least made a little bit of money, more than I normally would have had off of my crypto, when I told you that story where, one day it was at 16 grand my crypto was worth, then the very next day it was at 8, so I sold at 8 because I thought it was going to go higher, and I missed out on making $8,000 more. If they would have been able to tax me on that 16, I would have been SOL, Instead, they taxed me on 8 because that's what I actually made, So
okay, well,
so taxing on unrealized gains is not something that anybody should be doing. But I read an article about over in India where the crypto market has created an issue for everybody that has gained money through the crypto market, because apparently I guess those people weren't setting money aside or something like that, or maybe India does tax on unrealized gains. I don't know exactly how they do it, but it made it sound like these people had taken their money out and then reinvested it, and now they've lost it all. So now they don't have any money because they lost it all due to the crash.
right, exactly.
And I'm pretty sure that now that I said it out loud, that's probably what happened. But in my mind, I'm sitting there thinking, well, didn't they keep some for the taxes? But apparently, I guess they didn't. So, now those people are in dire straits because they have a tax bill due and they can't pay it because, well, they didn't pay the taxes. They just reinvested it, which is kind of the smart thing to do if you know what you're doing. But if you don't pay your taxes and then you reinvest it all and you lose it, now you got to pay taxes and you don't have the money to pay it,
Mm-hmm.
So
yeah, I think I saw that India is going after the people for the taxes, even though they lost the money
Right.
because they had it there. And I know that some other countries do the same thing. I'm kind of surprised at after the crash. I guess Luna is getting blamed for the crash more than anything, and they've come up with Luna 2, and Luna 2 I see yesterday was at $6. And I'm wondering, how can they get $6 out of Luna 2 when the Luna crashed? And the guy just goes ahead and rewrites his algorithm. He dropped off
an
the
entire
part.
new coin. Yeah.
Yeah.
That's why I was like, nah, I'm good on that.
Doesn't that make crypto look like a scam?
It makes that particular crypto look like a scam. I mean, you lose billions of dollars and then you turn around and you just pretty much rebrand, like we talked about the last episode. You're just, all you're doing is rebranding.
Mm-hmm.
You're not doing anything different. There are differences between Luna Classic, which is what they're calling it now, and Luna 2.0 or Terra 2.0 or whatever the heck they're calling it.
Yeah, I think it's Terra. Yeah.
But to me, I don't think I'd put my money in something where the person failed miserably or they had a extreme crash that was outside of their control, which I think it was outside of their control. But at the same time, instead of trying to fix it, you just rebrand because, it's easier to rebrand than it is to create, or it's easier to create a new one than it is to fix the old one. Or, it's like when a company gets sued for something, they just go out of business and then they create the same company under a different name,
Yeah, the computer industry used to be famous for that.
Oh yeah. I know you know that firsthand.
Yeah. When I was working in the computer industry full time, we used to have distributors and smaller stores that built computers, custom computer type things, and they would be there one week, and then the next week they would be gone, and then you'd find out, they were on a net 30 and they owed us about $10,000, and then 2 weeks later they'd be back in business down the street in a new place under a new name.
Yeah,
same
Bob
people.
from ABC Computers is now Bob from EFG or whatever.
Yeah, Bob from EFG. Now, that brings me to an article that I just found here. Cryptocurrency scammers have stolen over $1 billion from 46,000 people since the start of 2021, a new Federal Trade Commission report says. The FTC rang the alarm bells on Friday, saying crypto-related crimes amount to about 1 out of every $4 reported lost to fraud, more than any other payment method. The median individual reported loss was $2,600. So that's, right there in the middle, I guess, is the median. The vast majority of those who reported being built used Bitcoin to pay scammers at 70%, followed by Tether and Ether. The victims typically are part of a younger age group. Those aged 25 to 40 are 3 times as likely to lose money due to fraud. Crypto scams are becoming increasingly popular, shooting up 60 times higher than in 2018. It has all the elements that give scammers an advantage. No bank to flag suspicious transactions, irreversible transfers, and novice investors that are largely unfamiliar with how crypto works. And, they're saying just $1 billion, but the Luna scam, I guess, was $40 billion. So I guess maybe they hadn't got around to counting that one or something yet. But what do you think of those scams?
Well, I mean, just like everything, nothing's 100% secure. You being the end user, you have to be smart about where you put your money, who you do business with, and you, in the back of your mind, you should always be wondering, is this person legit?
Right.
I mean, there's ways to protect yourself, but you have to be proactive and not reactive. You can't give somebody $40 of your crypto, expect them to turn around and give you something back and then just run, and there isn't really any recourse for you, so you got to be smart about it. It's up to the individual user to both keep their private and public pins secure, so that way they don't get scammed like so many people are. And I mean, even then, it's not a 100% guarantee that you're not going to get scammed. It's just lessens the likelihood of it happening. It's just like when the Department of Defense got hacked. Guess who gets identity theft protection? This guy, because they can't keep their servers secure. So I know my information's from when I was in is all out there somewhere floating around. I don't really care that much anymore. I'm just like, well, nobody's used my stuff yet, but that doesn't mean it ain't going to happen.
Well, you know what happened to me last week when you said that? It just brought back this memory here. I got not a bill, but I got a notice from a bank. I'm not going to say who it is. A bank showing me that I had a new checking account with them. Well, I hadn't opened it. And this bank originally sent me a check. I had done business with them in the past, but the account was closed. They sent me a check for $5 saying that it was left over from the account or something. Well,
Nope.
I knew that wasn't right, but I put it in my pile of crap to look at later. Okay, so anyway, the $5 just isn't motivating to me because everything I do is digital now, and so I have to make I got to take a check to a bank, and it just wasn't on the list yet.
First, what I do is I take that check to the bank that it came from and say, hey, is this from you guys? Is it legit? Because there's been a scam that is kind of well known and kind of not going around where people will create fake checks and they will send them to you and say, this is from such and such bank. And, usually it's for like a large amount, like $500, $700, or $1,000 or even more. Well, what happens is that you deposit that check and then all of a sudden your bank account is negative because something in the check is you're actually paying that person some. I don't know exactly how it works. I don't know how all that check stuff works. I'm not up to speed on that, but the check, so you end up owing money to the bank because you just somehow deposited this check and it was actually a scam, and you ended up paying whoever this check was from the money that is on the check. So if it says $1,000, your account got debited for $1,000. It's like you swiping your debit card somewhere, and the bank will say, well, tough, you cashed the check, and you'll be like, but that's not what it was for. It says it right here. And, I think there are some FDIC protections on that now that, people know about that type of scam, but I'd be extremely cautious about that.
Well, that's what I was going to say. This one was only for $5, and I just threw it in my pile because I'm just not going to go to the bank for that right now. I'll wait till I got another trip to go. So like a month later, I get another letter, and it's showing me my new checking account with no money in it. And so I finally called the bank. I said, look, you guys sent me a checking account statement, and I don't have an account with you. So they look it up, and they go, oh, you're right, you don't have an account with us. And she and the lady that I was talking to says, I'll give you a customer number for that. She says, you probably won't hear anything about it, but this is the number that you have talked to us about. So it was like 982688. And I says, you mean there's 900, I'm number 982,000 on this? And she says, yeah. I'm going, 982,000 people have gotten this before me. And I'm going, well, why don't you do something about it? You got 982,000, that's almost 1 million people. And they said, well, we're working on it.
Yeah. It makes them look better if their numbers are higher, because then, they can probably borrow more money from whoever they borrow from, or, to leverage their actual customers' money, et cetera, et cetera. So,
Well, so I just thought, it was just ridiculous, because here's this bank. It looked very legitimate. I almost went down and put the check in the bank, but there was, I wasn't motivated
$5,
enough.
Yeah,
for $5. If it would have been 500, I might have, but I would have still been suspicious because I knew that account, there was nothing left in it.
All right.
Okay.
It was all gone.
And it was the account where I bought my last car. Okay. And I knew that was paid off, and I knew I didn't pay anything over that. But it was, just sitting there. But yeah, this thing looked legit all the way. So I assume that all banks are having that problem, just not the one I was using, So again, listeners, if you're joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM, with your city in there, Monday to Friday at 11 a.m. and 4 p.m. Now, for more information, you can call me, Matt Leach, at 314-781-7612. That number again is 314-781-7612. Or call our 800 number at 877-212-1400. And we do have a new website. The website is ccodweb.us, and that's Charlie Oscar David web.us. Take a look, leave us a comment, and we will get back to you. Now, our discussion today is a beginning course for people that want to be educated in the world of cryptocurrency. And let's keep talking about the discussion of our cryptocurrency. Now, we've talked about all the banks and how they're planning on taking over the world and with the new financial system and all that thing. But what I want to know is who controls cryptocurrency exchanges versus the banks? I guess we kind of know who controls the banks, but how do those two things work together? Do you know?
Oh, sorry. Well, the people that control the crypto exchanges are the people that created the exchange. Whatever company created them, or whoever created them. Like the Bitcoin exchange is created by the person that created Bitcoin, so they hold on to that. Ethereum, all of them, Shiba Inu, even though Shiba doesn't have its own exchange yet, when they do finally come out with one, the developers of Shiba will be the ones that control the exchange. Mm-hmm. So, that's pretty much who it is. It's not controlled by one person, more like an entity, because I'm sure that they all created their own business, or at least LLC'd or something like that, to give them some sort of legal protections if something were to happen to somebody's money. You sue the LLC instead of suing the person direct.
Right.
If they're smart.
And so they can set certain parameters when they accept a new crypto too.
Yeah.
And I don't know, that's another thing too. All the exchanges and all the different cryptos that they're using, do those cryptos get to set their own parameters? Is there any room in there?
If they get some wiggle room to do what they want on the exchange, they probably do. I don't know the inside workings, but I would assume that they'd get a little bit, but then they'd also have to meet a certain criteria for those exchanges. Not all exchanges are going to list every coin, because that would just be a lot of bandwidth that they'd have to be using. But also, the coin might be a scam coin and they don't want to deal with that. Or, scam coins tend to make exchanges look bad, like that. Once again, that Squid Game coin that came out, the exchanges that it were on, they looked pretty bad for letting it on, Mm-hmm. There's exchanges have to be confident with, or the people have to be confident with that exchange in order to, even put their money in. And that's what exchanges need to do, is build confidence. So
building confidence. Yeah, that's probably job number one. But what I was just thinking is, on the exchanges, you mentioned it before, you need to kind of know your, the exchanges have KYC, know your customer. So does the customer have KY, what would that be, KYE, know your exchange, and how do you check those out? I mean, is there a place you can go just to, other than, I guess you can Google it, but is there like a company that rates exchanges, for instance?
There might be. I haven't actually looked it up if there's a company that would rate exchanges, but that's a great thing to look up, I think.
Well, that would be good, especially if you're rating the exchange. That might be a way to make some money. I mean, we're going to rate your exchange, and we're going to send the exchange customers, and that kind of thing. Well, the guys who aren't doing such a good job won't get as many customers. So here's our tip of the day. We're coming to the end of our show. When it comes to keeping your cryptocurrency safe, there are a few ways to store it. Digital assets are held in either hot or cold storage. Hot storage refers to an online digital wallet, and cold is an offline wallet, typically stored on a hard drive. Experts say it's best to store the majority of your crypto in a cold wallet to prevent hackers from gaining access. So you might look into that. Keep your crypto safe, and be a great guy. We're at the end of our show. Come back next week, listen to us some more, We're going to have probably a different speaker next week. We'll see how that works out. And remember, the big tip of the day is don't take any wooden crypto.